Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the edition where our focus is on the Q3 earnings. India's largest paint manufacturing company, Asian Paints, has reported Q3 and a good set of numbers coming in over there. Beat Street estimates on PAT, on margins, on volume growth as well. It's reported a 35% year-on-year rise in the consolidated net profit for the quarter ending December to 1,448 crore rupees. The consolidated revenue from operations grew by about 5.5% year-on-year to 9,103 crore rupees. Now to discuss more in detail about the earnings and also the outlook going forward, I'm now joined by the top management of the company. Mr. Amit Syngle now joins in. He's the MD and the CEO of Asian Paints. Amit, welcome to Business Today Television. It's always a pleasure to host you, and especially after the earnings, because you give us a brighter picture always about what the future is going to look like. It's panned out as a decent set of numbers. The street has taken in well, although it's a bad day on the markets. But your own sense of how have you analyzed the quarterly earnings? Has it panned out as per your expectations, better or worse?
So overall, I think for us, the quarter has gone up quite well. When we look at relative to the first half of the year, I think it's been a strong quarter in terms of giving us very, very strong volume growths of 12% that's come in. And our industrial sales has also kind of done extremely well with value sales in double-digit numbers in terms of what we've been able to register. I think the biggest plus point has been that when we look at our margins, they have been really got on to a very good start. We are now straddling at almost one of our highest gross margins in the last 11 quarters overall to that extent. PBTIT margins have gone up by about 400 to 500 BPS points relative to the same quarter last year to that extent. So overall, on the whole, we see that there has been a very, very strong performance which has come in even in terms of the deco value growth in terms of about a 5.5%. If we net off the price decrease, the sales is possibly in the region of about 7.5 to 8% in terms of value growth. So in all, we see that whether it is industrial, decorative, even the home decor category, I think the performance has been pretty good in terms of this quarter.
Okay, you pointed out about the 12% volume growth. That's again ahead of expectations. What do you think really drove the volumes for you, and what's the outlook? Would you be even able to inch it higher in the coming quarters?
So what we see is that I think the big change in terms of this quarter we saw was that definitely the T3, T4 categories of cities, which are the smaller relative towns in terms of they kind of progressed on a very, very good footing. The growths were comparable to the T1, T2 urban centers to that extent. And that was, I think, a very positive sign in terms of what we could see in terms of the growths coming in. The festive season was also good. And I think we were able to kind of register good growths from in October and November in terms of our overall performance. The project sales business, which caters to the institutional B2B sector, has also been very, very good in terms of really catering to the government sector, the infrastructure sector, which kind of comes in along with the factory segments which are there. So overall, I think these were instrumental in terms of giving us this kind of volume growth which has come in, which is riding on a very good growth of double digits on economy products, as well as a double digit growth on even the luxury products to that extent.
Yeah.
I think it's been a pretty strong quarter in terms of looking at getting these kind of growths overall from various segments.
Right. You had also pointed out that the demand really panned out pretty strong during the festival season and the wedding season that we had. But you also mentioned that there was a subdued demand in the latter half as well. Could you share with us what the demand outlook would be in the coming 1 or 2 quarters now?
So overall, I would say that the demand post the festive season was only a little bit down as relative to the festive season demand. So I don't think so
Okay.
the demand really pettered down to that extent. I think it was fairly normal in the subsequent months also. And as we see it, I think there is a fair bit of good demand in the market even now in terms of what we can see. And therefore, what we are really pitching is that we should be in, I think, the double-digit volume growth trajectory for this quarter as well as we kind of go ahead.
Okay. The company's operational performance also saw a significant improvement, and we did see an impact perhaps of the input cost pressures easing for you, a favorable mix as well. How do you see all of these factors really panning out now? Do you see continued support coming in from the lower raw material prices?
So there has been a deflation of about 0.2, 0.3% in terms of the overall raw material prices, which we have seen in Q3. What we predict that given the larger global consumption which we are seeing from US and China and so on and so forth is still subdued. And despite the geopolitical situation continuing, it might be that we are looking at further deflation, which would happen as we kind of go ahead to that extent. But at the
Okay.
same time, I think the way the international markets are going, where the geopolitical situation is going, we would like to kind of really watch it this month in terms of seeing which direction they're taking, because we see some volatility with respect to both the crude and the overall rupee dollar parity to that extent. And I think we would like to watch that before we really see in terms of what way the overall margins go.
Okay. And, on price cuts, you had taken this quarter as well. Give us the pricing outlook going forward, looking at the current scenario, because you are already watching out for how the geopolitical tensions are playing out and how would that really have an impact on the raw material prices. What do we expect?
So this year we've taken about a 1.3% overall cumulative price decrease already. And as we go ahead, given the fact that if the deflation pans out in quarter four, as we are anticipating, we would look at in terms of taking some price corrections and some increased spending in terms
Okay.
of our overall strategy. I think we would be able to take a call closer in terms of to the end of the month in terms of how situation is panning out, and possibly then chart a course whether we need to kind of continue spending in terms of the way we are, or we look at some price corrections going forward as well.
Okay. Give us a sense of the product mix that you recorded in this quarter. You did mention about luxury products growth definitely going very strong for you. Is that going to be trend even going forward from here?
We think so, because today, if you look at from a retail sector perspective, we see that the sale of premium luxury kind of dwellings have kind of increased. The registrations data indicate very clearly that premium luxury flats are moving much strongly as compared to the affordable housing to that extent. And that is an indication that the customer is upgrading strongly. Just that the size of the overall to that extent, even if it goes at double digit, it doesn't kind of really alter the overall value growths too much to that extent. But I think the indication is very clear that there is definitely a shift and the customer is upgrading towards the premium luxury products. And that is what our intention is, that we look at possibly upgrading the consumer as we kind of go into future.
Yeah, absolutely. You did talk about how your international business also saw growth in Middle East and Africa. They've registered increased profitability in this quarter. How do you see things panning out? Because Middle East is where all the global tensions are really panning out right now. Is that a watch area for you, and could that be a worry point?
So overall, if you look at our AP global business today, in constant currency terms, we've done a 5.2% kind of a growth, which has kind
Mm.
of come. Asia has been a more tension area for us, especially Bangladesh and Nepal. Bangladesh, we
Okay.
have elections, and Nepal has been showing signs of a slowdown for the last about 1 year to that extent. So I
Mm.
think if you look at net of possibly Nepal, we have grown in double digits in AP Global, which only
Mm.
indicates that the Middle Eastern markets and some of the African markets are overall kind of growing well to that
Mm.
extent. Therefore, we are pegging good hopes with respect to the entire Middle Eastern markets growing for us. We are only concerned about Nepal fighting it back and coming into that extent. I think Middle East market would continue to kind of grow well.
Okay, understood. You were talking about the margins and how you would be in a better position from a month from now to really understand which way the markets will be headed, margins will be headed from here on. But I've also spoken to you in the past about competition rising in the industry as well. And it's now, here and now, 1 or 2 months from here, we will see entrants coming in. You've also, in my past conversations with me, you said that, you are not, deterred with such a big conglomerates also entering into the fray. You have been a leader and you will be able to continue with your market share even going forward from here. How is the marketplace looking like right now? Has that stance changed for you at all?
In fact, last year we have seen almost three new entrants coming into the market, and these are even bigger players in terms of who have kind of now diversified into the overall larger paints business to that extent.
Right.
Last 5 years, we have seen a lot of other bigger players in cement and steel who have kind of entered the industry as well to that extent. But if you see the trajectory last 5 years, the numbers are indicative in terms of what competition has been able to do in terms of the overall shares of the industry to that extent. In fact, we have only gained share in the last about 3 years in terms of what you see. Going forward, today the industry is about 80,000 crore as we see at the end of this year. And I always maintain that even if big new players kind of come in, and even if they can register 5,000 crores in the next 3 years, they will be under 4% of the total industry. So I don't think so that there is too much of disruption in terms of the area of market shares which would happen, because this is not a very easy market, because your brand strengths, your distribution strengths, your strengths and relationships overall play a very, very strong kind of parameter in terms of deciding where you are. So I would say that it would be a real wonder if today any new competition can come and log in even 5,000 crores in 3 years, which would be under 4% of the overall market.
Well, absolutely. The other factor I wanted to understand is you've made a considerable amount of investments in the last 1 year, 1.5 years odd in your Capex, in adding different verticals as well. How do things stand as of now? Have those investments started to give you results as far as your books are concerned? Have they participated considerably in your top line as well? And going forward, what is the kind of expectations you have?
So overall, the capex is put in terms of all our brownfield investments have started yielding results, because we've completed our expansions with respect to two of our plants in Khandala and Kasna to that extent, and there is a third plant which we would be finishing this year to that extent, and that has really augmented the overall capacity and given us strength to kind of go into the market in a very, very big way. Our larger investments with respect to the backward integration, cement, VAM, VA, and all, they are on course in terms of what we are doing in terms of overall. But it will take about a 2.5 years before they kind of really start giving us results on completion. So, but overall, we are online with in our investments, and I think we are pretty confident that they would really add to the overall performance of the organization.
Okay, fair enough, sir. We're just about 10, 11 days away from the budget, or even though it's going to be an interim one and vote on account as well. But I have to ask you, in case you have any wish list ready for the finance minister, and what are your key expectations from the budget?
So one of the key expectation is that we expect the budget to be progressive from the point of view of industry and business. We expect that the kind of investments with respect to infrastructure, with respect to industry tariffs and so on and so forth. I think the government's policies have been very, very pro-industry in terms of looking at really churning big growth and really inviting investments into India in a very, very strong way. We understand that the same progressive note should kind of really continue with the area of infrastructure development, overall other developments which can churn the demand forward. I think that would be the wish in terms of saying that we continue with the same progressive note.
Okay. Well, all the very best to you, sir, for the upcoming quarters. And it's always a pleasure speaking to you and seeking insights on industry and your company as well. All the very best for the upcoming quarters. Many thanks for joining us on Business Today Television.
Thank you for inviting me on the channel. Thank you.
Thank you so much. All right. And with that, we will wrap up this very, very special conversation with Asian Paints top management. Good set of numbers coming in, and the outlook looks also positive as far as the management commentary is concerned. Of course, there are a few things which are on the overhang: the geopolitical tensions, the way the raw material prices will pan out. There has been a margin expansion, which the management also continues to focus that perhaps this will continue in case things continue to fall in the right light as well. Do stay tuned with us on Business Today Television, and we continue to get you such wonderful conversations from the top managements of the country and all the companies that you get to invest in the stock markets.